Hello and welcome to Bloomberg Quint. You're watching The Fine Print. With the GST Council having finalized most of the rules for the GST and the rates for most of the goods and services, the July 1st deadline seems almost inevitable. So, with 40 days remaining for the goods and services tax regime to kick in, we are now talking to industries, manufacturers and traders to see how geared up they are and how prepared they are. And today we have with us Ramesh Iyer, Managing Director of Mahindra Financial Services. Ramesh, welcome to the show. First up, the new shift for financial services like yours is the registration that you need to do in almost every state that you're present in. Can you help me with what was the experience like for you?
So, we just started doing that, and I guess it wasn't too difficult because there is preparedness on the other side for doing the registration. But I think the final registration will come in as the final date of implementation gets announced. Right. But I would kind of put it, if you were to put it on a scale of 10, I would say it would be very close to 8.
Okay. The rates just got announced last week, Ramesh, and financial services are pegged at the GST rate of 18%. First, give me a macro picture of how will it impact your business.
So currently it's about 15%, which means it goes to 18%, means 20% increase is what will happen to the consumers, but this is B2C. Now, so far as B2B is concerned, you will get a credit back, and which means it's only a timing issue. There will be no impact, but 15 becomes 18. To that extent, there will be an increase. But I guess the consumers will understand the ease of doing, transactions will substantially be much easier than possibly what it is today, I would guess. And therefore, this little increase should get accommodated.
Okay, so can you help me understand by how much maybe certain transactions, by way of examples, the kind of transactions you do in the B2C category might face an increase of what, like we offline discussed, about 20% increase?
Yeah, so 15 becomes 18.
Right.
So any transaction that we do with the consumers, whether of financing of the vehicles, with the ultimate consumer, only those are the transactions where you would see these kind of impact. Okay. And I would think, if you put it as 20%, it looks pretty steep, but 15 becoming 18, isn't it that steep?
Okay, all right. And for Mahindra, how much percentage of your portfolio is B2C versus B2B?
So we are a pretty B2C company. Right. I mean, almost all transaction for the month is B2C and widespread across the country. And therefore, I think almost all our transactions will have that kind of an impact.
And do you anticipate any working capital issues once GST kicks in? Because now you're paying that tax upfront, right?
For a large company, these are really not big cash flow impacts.
Okay.
And our belief has always been statutory regulatory implications. While they come in, it may come in with some kind of an administrative pressure, etc. But I think they get pretty well accepted over a period of time, and then one should start looking at the benefits that it can bring in, rather than discuss too much about what's the impact to start with.
All right, understood. And since you mentioned benefits, can you take me through some of the opportunities that you see now by way of certain new kinds of transactions that NBFC will want to look at under the GST regime versus transactions that weren't as lucrative currently for NBFCs?
So I would think if you look at many countries, leasing is one very prominent product from a financials perspective. The customers do want to acquire asset but may not want to retain it with them for too long, and they will look for a good residual value on the asset at the end of the contractual period. What can that be? And with that can be offset in the EMI, therefore they pay that much less EMI. For some reasons, leasing wasn't as prominent in the country because of inefficiency of tax like lease tax, etc. And I think with GST coming in, all of them getting bundled into one, I would think leasing could be one really strong emerging opportunity.
And what are some of the products that you may want to look at in particular?
So I would think largely large commercial vehicle could come into this segment. Construction equipment could come into this. Personal segment vehicles could come into this, because these are assets where the consumers are willing to look at changing of the asset over a period of time. Resale price is a very important aspect, and with a good OEM support, if a residual value can be really arrived at well, I would think these segments should show a lot of interest.
All right. Let me also come to a big part of the GST sort of ecosystem is the technology that companies and both the government will have to be prepared with. Talk to me a little about your technology preparedness. What did you have to change to get on to the GST sort of systems, and how is that turning out for Mahindra Finance?
So I think first is, we operate in almost all the states in the country, which means there will be transaction happening in every state. So our systems need to ensure that we are able to file our returns at state level. So to that extent, the technology undergoes a quick change. Second is, today the technology features are to handle the current transaction tax rates. Now with the GST coming in, we'll have to change the way it is computed and the way the returns get filed. So like everyone else, we are also engaging with the consulting agencies who can advise us as to what's the right kind of a technology that one needs to use. But I think the good news is, these kind of changes are not particular to any one company or possibly not even to one particular industry. So therefore you will find there are many such service providers who are available, and therefore implementation of these would become much easier. Initially it will come as a very standard package, but then I think as we start transacting through that, as we unearth some new requirements, to that extent I think the amendments will take place.
Okay. Most of the rules though have been finalized by the GST Council. A lot remains unclear in terms of maybe the specific transaction treatment for NBFC. For instance, repossession of assets, assignment of receivables. Could you help me understand what is your understanding of how these transactions might get treated under GST?
So I think as far as the repossessed asset sale is concerned, we would think that there is a rate which will be applicable to these transactions, which eventually therefore would mean that buyer of the second hand asset would pay that much more. I'm not too sure, maybe it will also can lead to, will that be a part of the overall price, which means therefore the overall price of the second hand vehicle drops a little, right, if you have to accommodate this tax. I mean, that's the way we understand it today. As far as assignment is concerned, it's more a financial arrangement. It's not real of selling of an asset, it's assigning a portfolio to another party. So I think there little more clarification needs to come in terms of how this transaction is going to be really treated. Like for example, similarly on the penal interest, there is no clarity yet on, because penal interest is nothing but it's part of the overall portfolio interest rates. It's just that someone delays to pay you an installment. Instead of a 3-year contract, if you had given a 4-year contract, you would have anyway recovered 1 year interest, right? So on loan, the interest is today not taxable. So therefore, just because somebody wants an extra time to pay a certain amount, I think it's the word penal interest is coined from a point of view that someone has delayed paying you and therefore you charge him an interest. But if you were to kind of look at it as an overall transaction, somebody is paying instead of 36 months, somebody is paying it in a 42 months time frame. Right. So I would think that penal interest is not something that you charge as something extra. You're just charging him an interest for the period of use. Right. So I would think that should get exempted, and I believe it would.
Okay. I'll just like to come back to our point on the repossession of assets. Can you give me, and for the benefit of our viewers, a typical example of repossession of assets and how it was currently treated and probably the way forward?
So, currently we repossess asset and we don't capitalize them, and it's not owned by us. So we are a pass-through in a way. So somebody delays repayment, surrenders the asset until it is sold to someone else, right? We hold it in trust, and it's actually sold on behalf of the consumer to someone else at a price agreed, and the differential price actually has to be paid by the original borrower if there is a loss. Right. But there is a view by the tax department that there is a value-added tax applicable on this because it's a sale, and we've been kind of controlling this and justifying to them and kind of explaining all the time to say that we are only holding it on trust.
But there have been judicial proceedings to say that VAT is
applicable. So there is a demand on these assets, and we have paid some amounts also under protest, etc. But now with GST coming in, a second-hand vehicle, when it gets sold, there will be a rate of X percentage applicable on the second-hand asset.
Okay.
So this becomes a transactional cost on the second-hand asset. Now, either somebody pays that additional tax when they buy the second-hand vehicle. That will completely depend on the supply-demand situation, right? If a product has a very high demand, you may be able to charge the tax. But if the products don't have as much demand in the second-hand market, then possibly the price will have to accommodate this tax. So to that extent, there could be an overall drop in the price.
Okay. All right. Before I let you go, Ramesh, one final question on what are some of the areas again that you are still unclear about in the run up to the GST, and also how will the transitioning period work for you?
So as far as the transition period is concerned, I would think we'll have to put through some transactions to really experience to say where are we getting stuck and what are the challenges. I think the bigger administrative issue is going to be filing of return at every state level. We'll have to build teams around each state who will be able to handle it, while there'll be a centrally controlled transaction zone from where returns can go and then somebody files it locally, etc. But still you will have to have local employees who understand this better. So I see a very clear increase in the regulatory cost for managing these. But over a period of time, these benefits for a fact would come in. As far as the unclear area, as I said, is concerned, more on the penal interest part and the assignment transactions for a finance company point of view. But on the opportunity side, as I said, leasing is one new big opportunity, and if that is large enough, I think all of this can be very easily accommodated.
Settled. Thank you, Ramesh, for joining us on Bloomberg Quint. Increase in administrative cost in the short term, but lots of opportunities as GST kicks in. That's the view coming in from Mahindra Financial Services. Ramesh Iyer. Thank you so much for watching Bloomberg Quint.